Manufacturer's E&O, or errors and omissions insurance. What is it? Who needs it? Why do manufacturing companies need it? I'm going to answer these questions and more in this video. Hi, I'm Gordon Coyle. Welcome back to my channel where we talk about the risk and insurance issues on the minds of business owners. So when we think of E&O, or errors and omissions insurance, we tend to think of occupations or professions that provide advice to their clients, like consultants, architects, financial advisors, engineers, and so forth. If they give bad advice or advice that has an error or an omission in it, and a client sues them, that professional's E&O policy is going to pay that claim. So why do manufacturers need to consider E&O? They're not giving advice. What's the risk? Well, let's take a step back for a moment and consider what E&O claims focus on, and that is paying claims for financial damages suffered by third parties, like customers. That's the crux of E&O liability and how it differs from general liability insurance, which focuses on bodily injury or property damage claims. With that in mind, here are the types of claims which can be triggered that are not covered by a manufacturer's general liability policy, pointing to the need for E&O. First one, a product does not work as intended and causes consequential financial damages to its customer. Second one, a product is alleged to be defective by the manufacturer's customers who sustain additional costs and lost income and then sue the manufacturer for recovery. Third, the mislabeling of consumer goods triggers a lawsuit against the manufacturer for the cost to remove non-compliant goods from a retailer's store. Lost revenue and reputational damages is what its risk. Fourth, a manufacturer fails to deliver seasonal goods to a retailer on time, which triggers financial damages to the retailer, who turns around and sues the manufacturer for their loss. None of these types of claims would trigger a manufacturer's commercial general liability policy because no bodily injury or property damage occurred, which is what's required for GL to respond. They all point to the need for manufacturers' E&O to be considered by manufacturing firms to close that potential gap that exists in the general liability policy. Would these types of claims be covered by the manufacturer's umbrella policy? No, the umbrella or excess liability policies are intended to cover claims that are covered by the primary general liability but exceed the policy limits of protection. What about the D&O, or directors and officers liability? Again, I'm afraid to say no. That policy focuses on claims alleging a wrongdoing in managing the affairs of the company. Manufacturer's E&O is a unique coverage part that can be written as a standalone policy, but some insurers can offer it as part of a package. However it's available, it should be a coverage part considered by many manufacturing companies. For firms that import goods from China or elsewhere outside the US, they too should consider manufacturer's E&O, since they are considered manufacturers for insurance purposes, and their general liability policy won't cover this exposure. Have other questions about manufacturer's insurance? Not getting the expertise you need to protect your manufacturing company? Why not give me a call and let's have a conversation to see if we may be a good fit for you and your manufacturing company. My contact info is in the description box below, and I'd love to hear from you. Thanks for watching, and if you found this video helpful, do me a favor and hit that like button. Thanks.